May profits be upon you. Welcome to another weekly Forex forecast. We're going to take a look at the S&P, the NASDAQ, and the DOW. First, let's start with the S&P. We're going to do some quick top down from the monthly down to the daily, right? And on these monthly candles, you can see we're very bullish, right? And if you take a closer look, you can see how price has broken away. Come on, man. What was that all about? All right. You can see how price is broken away here and here. And we closed above last month's, we haven't closed above last month's candle. But what I would like to see is that price closes above last month's candle high and stay bullish. That way I can have a bullish outlook for the next candle. All right, the next for next month's candle, which will be in approximately 4 days and 2 hours. Okay, if we go to the so we're bullish on the monthly. All right, on the weekly, uh, if we look at last week's candle, it was a very bearish one. All right, and it took the low of the previous candle. All right, that's not good. If we have a bullish outlook, this is not good. However, if we look at the high and the high of 3 weeks ago, and then the high of previous actually 4 weeks ago, and the low of the uh, month before last, the week before last candle, we can see that it has formed a bullish fair value gap, and I said all of that just to say it's formed a bullish fair value gap, right? It's formed a bullish fair value gap, and although it has probed below the 50%, the halfway mark of this bullish fair value gap, the mean threshold, it has not closed. And I want to make sure, I want to see that it doesn't close below that 50%. All right. That way, we can say that this candle has showed respect to the bullish fair value gap, and we can expect bullish market, bullish price action afterwards. All right, but we haven't closed, and in 4 days we might, it could close down on that. We're going to see. All right, if we go to the daily, uh, this is that same weekly fair value gap here, and you can see the close, the open, and last Friday's close. Friday's close is still above the mean threshold of this candle of this fair value gap. So my outlook is bullish, but what we want to see is bullish fair value gaps forming so that we can have uh, something to base. We can have the context for prices to move higher. We don't have that context right now. In this wick are bearish fair value gaps. If we go down one time frame to the 4 hour, if we go down to that time frame, why did you notice that? You notice my arrow disappeared? Let me make sure that we get this on every doggone time interval. I hate it when it does this. It's a flaw in trading view. All right, so we have the context, and you can see that price has this bearish, a very bearish engulfing candle for the past couple of days to the downside. All right, and if and you see how price negated the formation of a bearish fair value gap here. So this is neutral. This is neutral, and the order flow is neutral, and we have to wait for more context. I would say we need to see price form some bullish fair value gaps. Can I get us doggone? We need to see price form bullish fair value gaps from here. I don't want to see price go past this wick midpoint. If we take out this low of this wick, we start closing below this large wick midpoint, and take out this low, then I'm I'm inclined to think that price is probably going to go lower. All right, but what I'm looking for is price to turn around here and start giving some bullish fair value gaps, so that we can have a bullish, we can match our bullish outlook. All right, but we have to wait. I would say Monday might not be the day to be trading the indices. If you're going to trade the indices, I'd be looking for the S&P to lead the way for bullish fair value gaps, because it is better. What do you call it? The price action is more favorable to it. Just looking at how the week closed last week, right? This is some neutral stuff here. We need to see price going into that wick and um, creating bullish fair value gaps, like in the 4 hour and 1 hour time frames, to support higher prices. Now let's take a look at the NASDAQ. NASDAQ is a little funkier. All right. All right. I'm going to get rid of all of the, doggone it, man. I'm going to remove all the drawings. All right. I thought I did. Remove all the drawings. All right. You can see we've been bullish, moving higher. This old crazy wick was, it ended up a respect wick. All right. It's showing respect after it took this swing low. After it took this swing low here, where without bullish fair value gaps, or bearish ones for that matter, without the fair value gap showing up, what is our context? The swing low to swing high, and and vice versa. But in this case, we've swept the swing low. Likelihood is that we're heading up towards this swing high. All right, as the draw on liquidity. All right, that's the monthly outlook. All right, but it's kind of neutral, bullish neutral, if you will. If we go to the weekly, we don't have fair value gaps to show the order flow and support higher prices. We have a lot of doji candles. This isn't the greatest context to look for trades. You understand? That's why I would be looking at the S&P. Yeah, we have an old bearish fair value gap here that has been used. All right, so that's why it would, I wouldn't be looking at it at all, because it's been used, and the likelihood is that it will fail because it's been used. You understand? It's already been tapped. So here we are on the weekly, and there is no context for higher or lower prices. On the daily, uh, do we have any uh, fair value gaps? No, we don't. We don't have any bearish ones or bullish ones. We don't see any respect. It's just kind of dwaddling along, and this isn't the context that you want to take trades in. Okay, what do we see though? We do see uh, in the swing low being taken. We swept through it, and you have to think that the swing high is next, and that was already taken. All right. And then we have this big rejection. Where do you think we're coming for next? Where do you think we're coming for next? Without any bearish, bullish fair value gaps, this is probably going to be our next, uh, the next liquidity point that price wants to get. So price is only going to seek two things to look to offer fair value or seek liquidity. All right. When price looks to um, offer fair value, that means fair value gaps. That means coming back into fair value gaps, internal range liquidity. All right. Then we go to external range liquidity, which is the lows and highs. All right. So if you're going to look for trades, ES is the S&P is showing more, uh, showing more towards clarity in the way of showing order flow and whatnot. All right, this one is this is the kind of range bound um, price action that you want to avoid. All right, if we go to YM or the Dow, we go to the monthly. The Dow is decidedly weaker. You see how the month is bearish, and we're showing this rejection candle from the highs. All right, it's coming back into the range, the price range, right, of this especially the previous candle. All right, the previous monthly candle. I'm going to get rid of all of that. All right, and we're going to see. Yeah, I got it all. All right, we're going to see what we got, but it's been bullish, and we don't have any context to say, hey, price is going up or down. You're looking for price to take out highs. We have a very small bullish fair value gap here. I mean, almost non-existent. But with price coming back so far into this candle, it negates its value, in my view. All right. If we go to the weekly, you can see how much momentum is in that bearish candle there, and you can see that we've already traded through a bullish fair value gap here. All right, just took it out. All right, just made it a non-factor. So once we reach these highs, all right, and this was external range liquidity being taken from this swing high. What do you think the next object is? The next target? We got a low there, a swing low, and that's going to be our next target. That's the likely next target for next week. All right, and I think there's a high probability that we're going to hit that. All right, we're probably going to see a bearish fair value gap inside of this candle on the daily, one time frame down. All right, you can see price has already respected. God dog it, already respected this bearish fair value gap here. Came back up. This is negated. All right, came back up, stung into it, and continued down. If I can just get it together over here, that would be nice. All right, came up into it, and we are speeding down towards the swing low. I think that is a target that is likely to be hit, and we'll see what happens after this swing low, because then you expect some kind of pullback. If we start to develop bearish fair value gaps inside of this leg down, there's a good possibility that price will take that low, swing back into it, and continue even lower down to these bullish fair value gap areas down here. All right, but if I'm going to take a trade to the upside, I'd wait very patiently for the S&P, and if I want to take a short, I would choose the yen. I mean the YM or the Dow. All right, and if we can cheat just a little bit and look at the 4 hour, you can see that we have a very large uh, uh, bearish fair value gap here that gives us more context that price has every intent on going down, going further down. So, but this this low was not taken. So just be careful. But I think there's a good chance we sting into that and then hit our target. Okay, I hope you've enjoyed this video, and I hope you got some information out of it in regards to the indices. Be careful. Maybe you sit Monday out and let uh, the the price action develop so it can give us some clarity. Okay, that's my advice. But it's only advice. You do whatever you want to do. All right. Uh, I'm just trying to give you a good a good hold on what direction price is going to take, the bias. If we get directional bias down, the execution becomes easier, right? I'll see you in the next video. Thank you for watching, and look at one of the two videos that I have on your screen right now, and get caught up on the latest outlook for the week ahead. I'll see you in the next video. Thanks.